Someone threw a spanner in the works.
Going to have additional costs in sorting all this out.
Government debt as a share of GDP has nearly tripled.
Sign of the times caused by what's going on out there with the government.
All these people that invested between £50 and £12,000 are going to get absolutely nothing.
Absolutely, get all the bad news out of the way.
Yes.
Yeah.
All okay?
Yeah.
Looking forward to this. Hi, should we go see what we've got to cover?
Hello everyone, I'm Anthony Vokes and I'm a tax director with the Bright Bygard Chartered Accountants.
I'm Julia Clark. I'm also a tax director. I specialise mostly in corporates.
Okay, so we're here today to talk about yesterday's spring statement, which was delivered yesterday by Rachel Reeves. And if you're watching the news, you might think that not a great deal was said or happened, and I think you probably would be
Yes,
right.
I actually watched the statement and there was not a great lot was said.
So no big tax changes arising from this spring statement, but there are big tax changes on the horizon, which we're going to talk about shortly. So what we will do is we'll break down those big changes that are coming in shortly, and also we're going to briefly talk about the statement and what was said.
Yeah.
But the reality is that there wasn't any big news in it. It was more of a strategic pause before a busy April with all these new changes coming through.
Yes. Well, she said that we're only going to have one fiscal event, and she proved it. So there's very much a split between the Chancellor's approach and the OBR's approach. Unfortunately, they didn't make that same error that they did with the budget of getting the OBR figures out before the poor woman stood up to talk. But if you would listen to the Chancellor, then the government are cutting the cost of living, inflation, borrowing, debt interest all falling, investment rising. I mean, don't you love to live in a country
amazing.
That is so good? And of course, she's cutting borrowing. She said it was down by 18 billion compared to the autumn. And she's growing the economy and it's set to grow. GDP per person was more than expected in the budget, 5.6% over the life of the Parliament. But of course, when they published the OBR stats, it all seemed to have a very different flavour.
Slightly less rosy.
Slightly less rosy. And in fact, some of these points come straight out of the little summary that they gave before they launched into the detail, which is that basically government debt as a share of GDP has nearly tripled over 2 decades. Yeah?
That's incredible, isn't it?
Yeah.
So government debt tripled over 2 decades, 20 years.
It's pretty bad, isn't it? And borrowing, although the Chancellor is saying it is down, it remains at around 5% of GDP, and it's been like that for 4 years, apparently. So, of course, we know COVID triggered stuff, and it rose to. We just finished paying off the debt from the wars, apparently, and then up comes COVID, and we're back where we started. Yeah, borrowing costs are the highest of most advanced economies, and essentially, the OBR was saying that this interim forecast changed very little from the budget in November. So,
except that while they were preparing the forecast, world events were overtaking them, and it was kind of out of date before.
Someone threw a spanner in the works, and we've now got significant worldwide lack of stability, shall we say, which is really going to affect the forecast and whether it makes any sense going forwards.
So not a great deal in the spring statement. So what we thought we'd do is we'd talk about some of the big changes that are coming up, some of the things that are coming up in April that have been in previous budgets, just as a aid memoir as much as anything. So with effect from April, national minimum wage is going up. It's going up 4%. For people who are aged over 21 and 8.5% for people aged over 18. And I think that this just plays into how a lot of hospitality businesses in particular are really, really struggling at the moment with a lot of the tax and regulation changes that have been brought in by the government. So thinking about things like the national insurance increases.
Absolutely, I mean that's really hit anybody that has to employ a lot of people.
Yeah, the national minimum wage changes, the business rates changes that are coming up. And some of the numbers I've seen are incredible in terms of what's going to happen to business rates for some businesses going forward.
Absolutely. I mean, there are reliefs for certain sectors, aren't there? Like pubs and clubs and music halls, no less.
And I saw last week that unfortunately Brewdog has been bought out in what looked like a bit of a fire sale, which I think that they have said it's because of these tax and regulation changes made by the government.
Yeah. I've got a couple of friends who, in fact, invested. I think they're called punk equity holders or something. I don't know, but yeah, they've all received a letter going, you know, oh, we really, really value your support, and you know, we're going to carry on giving you discounts and this, that, and the other. But then, if you read the administrators' reports, it goes, oh, all these people that invested between £50 and £12,000 are going to get absolutely nothing. In fact, none of the regular equity holders either are going to get anything.
No, they had a funding round, didn't they? And they've got preferred stock, so that's all going to go to. It's all going to go to them.
That's it. Money gone.
Yeah.
Yes.
So I mean, it's really sad actually, because obviously Brewdog has been a big part of our country for the last 10, 20 years, however long it's been going. I've enjoyed a pint or two of it in my time myself. So yeah, it is very sad, but I think it is
Sign of the times.
Sign of the times caused by what's going on out there with the government and the regulation changes. Another thing that we wanted to talk about, which is quite a big thing that's happening in April, is the Making Tax Digital.
Of course, it's been in the pipeline an awful lot longer than since the autumn statement, the autumn budget, I should say.
It certainly has.
We've been talking about it for so long, and you know, you keep thinking, oh, it's going to get deferred, but now is the time, Anthony.
Yeah, April 26th is the time. It's been delayed a couple of times at least, hasn't it? So what this is going to mean is that property landlords and sole traders who have business turnover of more than 50,000 are going to have to file 4 additional tax returns per year. So they're effectively going to have to file a quarterly return that discloses their income and expenses to HMRC.
You were telling me as well, though, if they're VAT registered, it's worse, isn't it? Massively worse.
Yeah, if they're VAT registered, so if their turnover is over 85,000 for sole traders, doesn't generally affect property owners, but for sole traders, they already have to do 4 VAT returns, plus they'll have to do 4 Making Tax Digital returns, plus their end of year
correction or update, yeah that's
so it's
9.
It's going to be 9 tax returns for your average sort of sole trader, plumber, electrician.
And of course, you were saying, you know, a lot of these small sole traders, you know, they're more or less used to bringing in like or if I say a Tesco's bag of receipts, I should say there are other supermarkets. But of course, they're all going to need either specialist software or they're going to need to pay us to sort these things out for them.
Yeah, absolutely. Yeah. The Tesco bag of receipts from a taxi driver is going to be a thing of the past. They're all going to need specialist software of some sort, or they're going to have additional costs in sorting all this out.
Yeah.
So I'm not sure how well received this is going to be. I suspect not particularly well. And the turnover threshold's coming down, of course. So it's going to be 30,000.
More and more people being pulled into it.
30,000 from April 27 and 20,000 from April 28. So that's essentially going to drag in almost every trader at that point.
Because of course it's turnover, not profit, isn't it? So
yeah. So I mean, I suppose imagine if you sell second-hand items on eBay or Vinted or whatever. So if your sales turnover is over 20,000 a year, you may well have to file Making Tax Digital returns going forward.
Nightmare.
Nightmare, yeah, absolutely.
So this is, IHT, this is something that really has changed significantly from when it was announced in the budget. So, you know, over to you, it's your area. Yeah,
absolutely. So just as a recap for everyone, there was a big change in the October 2024 budget where they restricted business property relief and agricultural property relief to £1 million full allowance only, with a 50% allowance thereafter, which was a huge change because businesses have been used to having 100% allowance for many, many years. I think it was brought in by John Major. So that caused an awful lot of consternation in the market.
Oh, absolutely,
family farm,
yes,
the family farm tax as they were calling it.
Yes,
So,
there was a lot more unrest, if you like, amongst farmers and about the agricultural property relief than there was, there was a less stir about businesses, wasn't there?
There was, and I think that was because all of our farming clients, and we act for a lot of farming clients, of course, their end game for nearly all of them is pass the farm down to the next generation, keep the family farming operation going. Whereas for business owners, I think a lot of them are actually more focused on their own exit strategy.
Indeed,
how can they sell the company for the most amount of money?
Different options, that's right. Sell it to employees, sell it to a third party, retain the property themselves and get rid of the actual business. There are a lot more options, aren't there? Whereas, farming families tend to be wedded to the land.
They do indeed, yeah. So that there has been a bit of movement from the government. Just before Christmas, they released an update saying that they were going to increase the 1 million allowance to 2.5. Now that has actually solved a lot of problems for a lot of people. Yeah. Because it's going to be 2.5 million for Mr. and Mrs. So it'll be 5 million combined allowance. So a lot of businesses on the smaller end will.
It definitely helps with that, doesn't it? And we're talking about people who really have a lot of money, and indeed some that we know of who have invested in agricultural land for IHT purposes.
Absolutely, yeah.
So it is perhaps more targeted now at the upper end, isn't it?
It is indeed. I believe there's a court case. It's still being challenged in the courts. I believe there's a court case coming up on these changes. I guess watch this space, but I can't really see the government changing direction now. They made it 1 million. There was an outcry. They've made it 2.5. I can't see any more movement.
No. Personal tax changes. We've got all dividend tax rates up. Well, I say all dividend tax rates, but of course it doesn't apply to the additional rate payers. So, basic rate is going up from 8.75% to 10.75%. Higher rate from 33.75% to 35.75%, but the additional rate payers will still only pay 39.35%, only 39.35% on the dividends. And of course, the dividend allowance is unchanged. So it's only £500, but I suppose for a very small investor, that's chargeable at 0%. And of course, everybody gets that, whether you're a small investor or not, but it's a good starting point, isn't it?
Yeah, so they have gone after, they appear to have gone after owner-managed businesses quite a bit over the past few years, tax rate changes on dividends and NI.
They're worth going after because there's so many of them, unfortunately. That's the only reason I can think for targeting them. And of course, that 2%, they were also talking about adding it to property income tax and saving income tax, but that isn't this April. That's April 2027. So
historically, if you ran an owner-managed business, it's always been more tax efficient to take dividends than salary, pretty much always for as long as I've been in tax. I mean, that is really very tight now, isn't it?
It is. And I'm sure there are people there working it out depending on, if you're this rate, that rate, how it works. But of course, if you're taking salary and stuff, you're getting the relief in your company tax. So, and of course, some areas, no change whatsoever. And we're talking about the big freeze again. I know we covered it last time that we talked around the time of the budget, but because that's when they confirmed that the freeze would last till at least April 2031. But I think the OBR have actually said that from, when it came in, which I think was 21-22, through to 2031, the effect of this, because it's sneaky, is equivalent to like 4% on income tax.
Really?
Which is a huge thing. I mean, if we'd put 4% on income tax, the balloon would have gone up, wouldn't it?
I did see an interesting story last week about the standard salary rate for an MP.
Oh.
It's gone up to 99,500, something like that. And of course, we have the 100,000 threshold.
Yes.
Between 100,000 and 125,000, you lose your personal allowance. So it's actually a very unpleasant tax rate where you effectively pay 60%. I can only imagine that when their salary goes above 100,000, we're going to see some movement in that.
Yeah, you think they're going to reconsider, do you?
I think they might reconsider that 100,000 level, but we'll have to see.
Yes. But I mean, I think this is the sort of, I don't know whether to call it clever of the Chancellor, is because all these things are being brought in now, but the impact is trickling in over the life of the Parliament, isn't it?
Yeah.
So presumably she's not going to have to do anything too terrible when they're up for a re-election.
Absolutely, get all the bad news out of the way.
Yes.
Yeah, and speaking of bad news, capital gains tax, the rate of tax for business asset disposal relief cases where you're selling a business asset, generally speaking, currently it's 14%, but that is going up to 18% from 6th of April.
Yeah.
And that compares to the standard rate of 24%. And it's only the first £1 million of gain anyway.
Yes. I mean,
So
it's just been eroded, hasn't it?
It used to be 10 million, the allowance, and it was 10%
Yes.
rate. So now it's only effectively going to save 60,000. So it's not a huge number.
It isn't now, and of course the annual exemption went down from, I don't know, 12 to 6 and now 3, isn't it? So you
Yes.
make a gain, you will pay tax on it.
But you know, there are still transactions out there that we are focused on getting through before
Oh, absolutely, yes.
the 5th of April, because 60,000 is still quite a lot of money, and if you've got husband and wife, it's actually 120,000 because you're doubling up on it.
Yes, yeah.
So yeah, still important to get a lot of deals through before 5th of April.
The other thing that affects businesses, and it was one of the few things really that sort of affected corporate tax other than a lot of sort of international trading stuff, is the capital allowances changes. So they've tinkered with these so much over the years, haven't they?
Oh my God, yeah.
But this one is particularly important, I think, and beneficial for unincorporated businesses because they've brought in this new 40% first year allowance. And although it's got restrictions like no second-hand assets, cars excluded, you can have it for leased assets. And this is a big thing because, of course, you couldn't have first year allowances or anything like that for leased assets. The only thing is there is a specific bar on overseas leasing. So that actually came in from this January. But, of course, because we do sort of, you know, reporting later, we haven't seen it yet. But it's coupled with this cut in the main rate of writing down allowance. So, I mean, I'm pretty sure I remember it at 25 and
Absolutely.
then 20 and 18 for a good long while, and that's coming down to 14%. That is from either 1st of April if you're a company, 6th of April if you're a sole trader. And there's going to be a sort of a hybrid rate. So, you know, if your accounting period spans that or your period of account for your personal tax spans that, then, yeah, you're going to have some funny
often,
rate just for a year.
if you're a larger business and you've got a large pool of plant and machinery, fixtures and fittings type items where you claim a writing down allowance each year, this is actually quite a big tax change.
Because even at 18%, you know, I mean, it could take like 12 years to get about half of it. So lowering it to 14%, yes, it's going to make quite a big difference. But as you say, of course, our smaller companies, they've got their AIA, they've got full expensing, and you know, it's not so much of a problem, is it? But yes, if you've got a pool brought forward, it's going to slow things down, right down.
Well, thank you very much for listening. I hope you found it interesting. If you've got any queries or burning issues that you want to talk through with us, then please do not hesitate to contact us. We can either be contacted through email, phone, or via the website.